one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a Lead Balanced Fund that exposes you to slightly more risk than the Fixed Income Fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you're looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you're a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of ₦1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security.
Okay. Good morning, esteemed investors, and welcome to this morning breakfast section. My name is Linda, and I'll be taking us through the happenings of the previous week and our outlook for the new week. So, looking at the graph, we saw an upward trend in the movement from Monday to Friday, where Monday gained significantly 0.13%. Tuesday 0.15%, Wednesday 0.51%, Thursday 0.10%, and Friday 0.48%. So looking at the distribution of quantity traded, the service sector led the chart by 74%, and this is as a result of renewed buyer interest in anticipation of the corporate action that is meant to drop this quarter. So that's why we saw a significant buyer interest in the service sector. Okay, so on the equities market review, we saw a total turnover of 3.05 billion shares exchange hands last week, valued at 98.3 billion, as compared to the previous week where we had 3.2 billion shares at 69.2 billion traded in the previous week. So like I rightly mentioned, the financial service sector led the chart by 74%, and 2.26 billion shares valued at 52.1 billion traded within that week. So the total volume and value respectively. The consumer goods followed up with 141.6 million shares worth 4.02 billion. And the industrial goods followed up as well, taking the third place with a total turnover of 104 million shares valued at 3.30 billion. Trading in top three equities stock last week, we had Access Holdings, we had FBN Holdings, as well as Zenith Bank, accounting for 1.1 billion shares valued at 38.4 billion, contributing a significant 38.56% in volume and 39.11% in value, respectively. The ASI capitalization appreciated by 1.3%, That gave us 10593 points and 1.37% valued at 65.59 trillion. Secretarial performance under the lead capital coverage, we have 5 of them, but 4 out of the 5 gained, where the NGX Bank accounted for 4.66%, insurance 1.61%, oil and gas on the positive region of 0.56%, and industrial 0.85%. So looking at the projected scorecard, in terms of the recapitalization via the public offer and rights issues, we have Access Bank down to UBA. Their own process has been completed. However, the allotment of rights has begun. That of GTB, FCMB, and Zenith is still ongoing. I believe a lot of investors must have seen their allotted rights or public offering in their portfolio already. However, the process is still ongoing. Stanbic IBTC rolled out their rights offer, and it's 5 for every 22 units held by client as at 29th October. So the process is still ongoing and it will be ending this month. It's a good one for investors to take seize the opportunity and buy into the rights, because if you look at the closing price as at Friday, which stood at 62 naira, the offer price is going at 50 naira 50 kobo, so there's a discount. So it's a good opportunity for our clients to take positions and buy into the Stanbic IBTC rights. So for the final year dividend expectation, so we await corporate disclosure, corporate action from these companies as soon as we get them. I mean, for the final year 2024, as soon as we get the final report for 2024, we'll still come back to our esteemed investors and give them analysis of what we've been able to make out of the results so far. For now, we are waiting for the corporate action, which of course will be rolled out any moment from now, this first quarter. So looking at the stock recommendation for the week, we have number 1 to 28 under our buy recommendation. And our recommendation, like we always want to mention, are based on fundamentals, nothing around the sentimental region, because we're taking our time to look at the company's earnings per share. We look at the profit after tax, the profitability of the said company after tax, among others, to come out with our recommendation for the week. Looking at MROS, I think their corporate disclosure came out sometime in the week, and we looked at their profitability as compared to what they did in 2023. They did a profit after tax of 4.04 billion. For year ended 2024, they did over 6.5 billion. So putting it under our recommendation is because we've seen what that company is doing, and we are sure it's a good mix to have in your portfolio. So under our hold recommendation, we look at what the company is doing as well. And for now, some of these stocks are trading above our target price, even though the likes of Eternal Oil, their result was released recently, and they've been able to move from the negative region in terms of the profits after tax to a positive region. So we're placing it on hold as we see potentials around that stock. So don't be in a hurry to sell off that your position in Eternal Oil. Just go with our recommendation and see how best. So for Afriland and Geregu, we are placing Geregu under the sell option, and it's because the price is trading far above our target price, so it's still a good opportunity for our clients to take some profits while investing in some other stocks that we've listed in the tickers above. So for the expectation in this new week, the market, as I already mentioned, the market awaits the final 2024 results for the banks and other highly capitalized stock. The trend is expected to continue this week, and we'll see market reaction vary depending on the performance of these stocks. As we saw last week, market reaction to final year result for Eternal was positive, and the company's profit after tax stood at 3.23 billion from a loss of over 9.4 billion in the previous year. And also, this week, we expect buying interest to outweigh the selling interest with some profit taking expected and some stocks that have enjoyed capital appreciation. Investors will continue to watch out for good results from companies with good dividend payments and history and lock-in. And we anticipate investors would watch out for more fundamentally sound stock with track record of good dividend payments. And this may likely have a positive effect in the markets, which will certainly tilt the NGS to closing on the green zone this week. So with this, we've come to the end of the LSI market review. I hand you over to Mr. Samuel, who will be doing justice to the fixed income space. Thank you.
Good morning, everyone, once again. And very quickly, we'll look at what transpired at the fixed income markets. And if there's anything we would like to point out at this point, I would say is the consistency of our projection as regards to rate direction. And last week was quite interesting as we saw, I would say, never seen before a decline in rates. That was on the back of some of the activities that took place. But very quickly, let's begin with the funding rates. We saw that the open repo rate and the overnight rate advanced by 328 basis points and 318 basis points respectively on the back of squeezed liquidity in the system. Last week, there were a number of actions that took place. We saw the Nigerian Treasury bills auction took place on Wednesday, where about 670 billion worth of bill was put out on offer. When we get to the result to look at how the subscription went and the eventual allotment, but we saw that the settlement obligation last week put it as strained or squeezed out liquidity from the system. And as a result, we saw the funding rate closing higher at 32.42% and 32.75%. For the Treasury bills market, we saw the market close on a bullish note, and that was following the buy pressures that were witnessed post the primary market auction. At the auction, 670 billion worth of Nigerian Treasury bills was on offer. We saw subscription in excess of 3.2 trillion naira. We're looking at about almost 2.5 trillion over subscription. Just to refresh our mind, at the last auction that held 2 weeks ago, we saw subscription levels at about 2.1 trillion, where subscription was over 1.8 trillion. So that's just to speak to the fact that a number of investors in the market now understands direction with which rate is going, and as a result, we've seen more activities at the long end. If you look at the table on the board, we'll see on the 91-day, we had 50 billion on offer. 182-day, the 120 billion on offer, and the 364-day bill, we had 500 billion on offer. But then look at the subscription. For 50 billion, we had 42.3 billion for the 91. For 120 billion, we had 19.5 billion. But interestingly, look at the 1 year. For 500 million offer, we had a total subscription of over 3.1 trillion. That's almost 6 times the amount of offer. And what does that speak to? It tells us that a number of people are beginning to clock that. I think now is the best time for us to lock in our rates, for the longest tenure that we can possibly get, because it is now evident that the era of elevated rates might be coming to an end. And if for as many of our clients that have been joining this session, that's a song we've sung over and over and over again. And I think since December, we've seen this trend where rate at some points remain flat, then we saw that gradual decline. But at this point, it is obvious that the government's efforts now is to cut down on their borrowing costs, while trying to rake in as much funds they can get from the markets. And also, interestingly, this month we're expecting that the Monetary Policy Committee will have their first meeting in 2025. But surprisingly, on Friday night, we got a communique where they had stated that the meeting is going to be postponed as they are waiting for the inflation data from the Nigerian Bureau of Statistics on the back of the proposed rebasing. That's also to speak to the fact that the MPC is also looking at what direction inflation would go, because ideally one would have expected that you use the last figure of 34.80, but no, they're not doing that now. They are waiting for the rebase figure so as to also know what direction rates will go. And for many investors in the market, now that the inflation basket is going to be expanded, we expect that we should see some moderation in rates. And obviously, when that happens, we'll also see the Monetary Policy Committee also putting the MPR. So all of these points to one direction. They all speak to one thing. The era of elevated rates might be coming to an end. We can't say with certainty, but all indicators is pointing to a moderate rate environment. And that's to let us know that now is the time for us to make the decisions we might have been stalling on. And even from us in-house, we've seen some renewed interest from clients, particularly towards the end of last month to the first week of February, where a lot of people are trying to just lock in their funds for the longest tenure they can possibly get. So just to emphasize it again, to ring it again, that I know those funds that we have and we're planning to invest for the year 2025 now might just be the best time for us to take that decision, as the levels we currently have might not be available for a long term. So it might not be available in just few weeks or few months to come. And on the stop rate on the 91 and the 182 day, we saw that rates remained flat at 18% and 18.5% respectively. Whereas on the 364 day, we saw about 148 basis point decline from 21.8 at the last auction, at the previous auction, to 20.32 at the last auction. So for the bonds market as well, we saw the market closed on a bullish note, as activities at the Treasury bills market also impacted the bonds market. And if you look at the yield curve here, we will see that most of the activities took place between the 1 and 3 year maturities. That's to tell us that people are also trying to buy into some of the positions we have in the bonds market that still offer elevated yield levels, because as we've been able to establish, the direction is that we might not see the current levels in the market for so long. So we've seen that these indications, or probably this interest, they've all motivated or influenced clients to stay very active in the market. And there's a popular saying, while we might know all these things, I know a number of us that joined this meeting, if you are discussing with friends, colleagues, you know that, from what we've been told, or from what we can also see in the market, rates are going to decline soon, but are we taking decisions? I think that's the most important thing. So we don't just act, or we are not just there as passerbys, as observers. We also partakers in the opportunities that are there in the market. And then on the short end to the mid end, we saw that yields declined by 27 basis points week on week, while for the mid to the long end, we saw a decline of 17 basis points across the yield curve. For maturities that we saw significant activities in them last week, we saw the 26, the 2028, 2029, 2033s, 34s, and the 35s. Those are some of the maturities that attracted significant trade levels for last week. And at the end of the week, we saw that the average benchmark bonds, average yields across the benchmark bonds declined by 21 basis points to close at 20.38. It is important to note that this average yield was around 22.5, I think, some 5-6 weeks ago, and now look at where we are to 20.3. That's about over 200 basis point decline, and we might continue to see this direction going forward. For the foreign exchange market, last week we saw some bit of improvement or appreciation in the naira. Sorry, the previous week rather, but last week we saw the naira lost 1.82% at the official window, very close at 1,501 naira 61 kobo. If you've been monitoring this space, I would notice that not a lot of efforts are actually ongoing in that particular space. We saw last week where the CBN also came out to say that the $25 weekly sales to the BDCs would also continue. The whole essence of that is to improve liquidity in the black market. But if you look at it holistically, what would $25,000 do, in the market? I think we currently have an average of about 300 BDCs, if I'm not mistaken. But the supply levels still does not seem sufficient enough. So as such, we'll likely continue to see the volatility we currently have. But hopefully in weeks or time, with months, years to come, we would have some stability in the foreign exchange market. Across the forward contracts, we saw that just on the 1 month when naira depreciated, on the 2, 3, 6, and 1 year, We saw the continuous improvement of the Nigerian naira. And for our expectations for the week are just like we projected. We expect that the market will continue to trade on the bullish note, where rates will continue to decline. And as such, it's just best that we key into some of our products that we currently have so we can get to enjoy the benefits that are currently available. For the lead fixed income fund, the strictly fixed income products, whereby you get to invest your money for a minimum of 90 days. You can hold it for as long as you want, but there's a minimum holding period of 90 days. Currently, the fund has a yield of 18%, which I think is reasonable for any fixed income fund, considering the levels. Just as you can see for the 90-day treasury bills, just at 18%. 18%, any level above 18%, I think that there is a great level for you to invest. It's a great fund rather to invest in. For our lead balance fund, it's a fund that has a composition that comprises of both equities and fixed income products. You get to mix you get to mix and edge your investment against both activities at the fixed income market and the equities market. For our lead dollar fund, with the uncertainty we still have in our foreign exchange market, like I mentioned, we are not so sure of what direction the market might take, but fine, we can see concise efforts by the authorities. But I still feel like there's nothing bad in diversifying your portfolio, just so you edge against any potential depreciation in the currency. For our lead balance fund, currently I think the average yield on that is about 10%, and I think it's a great one. It's a great one rather for any dollar fund. Eurobond trading. Last week we saw some renewed interest in this Eurobond trading. I think some people are now beginning to look at this aspect, and I think it's also something we like to call draw our investors' attention to. That you have FX, you're looking at what to do with it. The Eurobond trading is also something you can venture into with a minimum of $200,000. You can get to have access to Eurobonds by sub-Saharan nations and also beyond. And coupons on that are paid biannually, which means you get your coupon twice a year and they are paid in dollars. Particularly for our diesel portfolio, we've been able to establish, at least from the previous direction in rates that we've all seen together, that the era of rates or elevated rates are likely coming to an end, which means that we should be locking in our funds for as long as we can. And this is where our lead Giza portfolio comes in. You can get to lock in your funds for as low as 3 months and as high as 365 days. And as such, you get to enjoy the current levels we have in the market as regards to it, because we might not have this in the market for long. And if you have interest in any of these products, our customer service lines are there. The relationship managers are there. You can always reach out to us, and they will be more than happy to provide guidance as you may require. And with this, we've come to the end of the presentation, and it's now time for question and answer. If you have questions, clarifications you would like us to, or probably issues you would like us to provide clarifications on, now is the time. Okay, we have some questions already coming in. What is our expectation for corporate action this year?
Okay, so with what we've seen so far with the corporate action being released, we expect that the year 2024 year ended is likely to do better than what we saw in the previous year, 2023, as we'll keep seeing renewed buying interest in some of the tickers following their annualized yield and what they've done in time past. So by and large, we're expecting to see positive results for the year ended 2024.
Okay, thank you. Before we take the other questions in the chat box, Mr. Olayemi Ibrahim, we can see that your hand is raised. You've been given the...
Good morning. Can you hear me? Good morning. Can you hear me? Can you hear me? Okay, good.
Yes, sir, we can
My
hear
question goes thus. Thank you for this wonderful. Okay, thank you very much. Thank you for this wonderful morning breakfast always. I've always been following through every Monday. My question goes thus. I saw in a report that MRS oil, they are going to be like they will approve voluntary delisting very soon. The same thing goes thus on FMN. I know on Nigerian Stock Exchange we have two FMN. We have one for normal FMN, one for NFMN. The one for normal FMN is no more on the stock exchange. We don't see it again. Why the NNFM, FMN is still there. So that's what I want to clarify now. MRS is still a good investment due to the fact that they said they will be going through voluntary delisting very soon. I just saw it on a report. Like I did not even see it on all news that time. So that's what I want to clarify.
Okay, good morning, sir. The listing, there are two different exchanges for the equities in Nigeria. We have the NGX, Nigerian Stock Exchange. We also have NESD, which is the second exchange. From the publication, we have also seen from the corporate unit of the MRS, they were planning to delist from the stock exchange and they want to be relisted on the NESD. So it's not as if they want to exit the market. So they will still be in the market, and but it will be on another exchange entirely. But what is much more important in our recommendation is that we are recommending based on the performance of the company. If you look at their Q4 result for 2024, which came out last week, of course, their profit after tax dropped for the Q4. But when you look at the performance year on year, we did better. And then most of the transactions, the activities that really drove this performance came from the sales of the PMS. And if you check Nigeria, generally, you see that MRS has been very aggressive in the sales of the PMS. So as investors, don't be afraid of the company being leaving the NGX. If they leave NGX, you can also take your dividends on the other exchange. Just like if you look at the Mobi is not on the NGX, but they're also on the NASD, and they're still paying their dividends. Anade was formerly on the NASD, and they came to the NGX. So there's a provision for company to leave one exchange to the other exchange because they have different requirements and different provisions. Thank you.
Okay, yeah, thank you. Another question.
Okay, sorry, sir. The other person you talked about, the flour mill, well, that one, they've been delisted and then they have been paying the payment is 86 naira. People have been receiving their fund. When you haven't gotten yours, you can reach out to us. But there are other two companies that are also listed on the NGX. We have Northern Nigerian Flour Mill and the Honeywell. Have you seen the performance of the companies? I think it has also moved to over 17. It's what is really driving it is the performance, is their results. So if you're interested in taking part in a company that is into a flour mill production, if you don't have access to that, you can buy the Northern Nigerian Flour Mill. It's also a very good company to invest in. Thank you.
Okay, thank you. Is it too late to start investing in the lead fixed income fund now? There's never like now is the best time to take any decision. There's never I think there's this way the coin, but now is the best time to start investing. It is never too late to take the decision today. Although the prices might be a bit high, but the further you delay, the more the price will continue to increase. So yeah, it's never too late to start investing. You can begin today. If you need guidance as to how to go about that, lines are open for guidance and clarifications. What stock will you recommend for a new investor that is only interested in capital gain to buy?
Okay, if you check our recommendations on weekly basis, there's a provision for the upside potential, which is talking about the capital gain, because we are looking at the current market price and the target price. So there are two ways to go. If you want to be an investor that want to take dividends, there's that provision in the recommendation. If you're also looking at the capital gain, we have also made provision for the upside potential, at least 10, 15, 12%. You see in some of those stickers we have also listed. As many investors in the market, if you want to invest in any company, you can take from all the stocks we have put in our weekly recommendation because they are based on hard fact and on the fundamentals. So thank you.
Okay, thanks. Good morning and thank you for the weekly updates. Why don't you talk about commercial papers? I would like you to enlighten us about commercial papers and the terms such as discount rates, implied yield, etc. Okay, so it's actually a deliberate act from us because we are trying to stay very careful such that we don't sell the wrong product to our clients. Currently we have all kinds of papers coming into the market, and you need to be very, very careful before you put in your money. One, for security. You don't want to give a particular company your fund and then to get back your money becomes a problem. So we are always very, very careful before we recommend any commercial paper to clients. But if there's anyone in particular you're looking at, maybe you've seen, and you need our guidance or our opinion on them, we can assist in reviewing them and then give our professional advice. but just so we don't sell, a product that we don't have any control over. If the company decides not to pay tomorrow, there's nothing we can do, and we don't want to be in that situation whereby you invest, or we advise you to invest in a particular issuance, and then it becomes a problem to people. But if there are any in particular you've seen, you can reach out to us. We'll look at it and give our professional advice on those. And then for the terms, discount rate is just the rate on return on the paper if you're trying to get your interest upfront. And for the implied yield, you decide that you're not going to get your interest upfront. You want to wait till eventual maturity of the fund. The yield will be applied on your investment. What is the current rate for money markets, and what is the projection for the year? The average rate in the market should be about, let's say, 6 months. We're looking at about 18%, 18.5% on average. And for projection for the year, we might see a decline in that as the year runs by. And that's simply because of all the expectations, all the indicators we've seen in the market, potential rebasing of the inflation figure, likely cuts in NPR. All those are the factors that actually drive our rates in the market. But for now, we see rates not going beyond or above where they are, and there are possibilities that they might even decline further. We haven't gotten our GTB public offer.
So I had mentioned earlier that the GTB offer, the allotment rather, is still ongoing. While some have gotten theirs, others are still yet to get theirs. So we are working on it to see how best we can get this done and reconciliation accordingly. So the last question is, do Lead Capital have an online? Okay, yeah, so we have an online platform. It's called the Lead Trader application. For more details on that, you can do us an email where we'll advise you on your login credentials and ways on how to get onboarded on the platform. Thank you. So with this, we've come to the end of the breakfast section. Thank you for your time. We hope to see you next week. So just in case you missed this section, you can subscribe to our YouTube channel and get updates accordingly. Enjoy the rest of your day.